And we are back. The lineup continues. We're just going to keep on firing off with our guests because they're lined up to give you the best content and the best for the best conference ever. Our next speaker is a technology expert, serial entrepreneurial angel investor, and internationally recognized speaker and author. With a computer science background, he is the CTO at Into the Block, a platform that leverages advanced machine learning to understand and predict crypto asset markets. He is also the chief scientist and managing partner at Invector Labs, a development studio focused on leveraging artificial intelligence in real-world applications. The title of his talk is You Know Price and Volume, but what about everything else? Fascinating metrics that will help you better understand crypto assets. Please welcome Jesus Rodriguez. Jesus,
Thank you very much. Thank you very much. Happy to be here. Thank you very much, guys, for joining. I hope, first of all, that you're staying safe in these uncertain times and that you're using this time productively. I, for once, am super thrilled to be here. When Erhan told me about this event months ago, I thought it was very ambitious, and I had doubts he was able to pull it off. So I'm very, very pleased to see that he has been able to accomplish, to put together this amazing event in this sort of unique times. We have 10-15 minutes to show you a ton of metrics about crypto assets. So I'm going to dive right in. So what we're going to do for the next 10-15 minutes is we're going to look at some very unique data about crypto assets that are going to sort of show you a unique perspective about the market. A little bit about myself after that great intro. I'm a computer scientist by background. I have a long history in technology companies like Microsoft, building quant systems on Wall Street. I teach Apply AI at Columbia University. I invest a lot, but these days, the bulk of my time is spent as CEO and CTO of this data science platform for crypto assets called Into the Block, in which we're trying to use cutting-edge machine learning to derive very, very unique insights about crypto assets. A little bit about the platform. So we're being used by some of the top exchange data providers, new side funds in the market. This is a quick snapshot about our customer base, but we're not here about to talk about the platform. I really want to show you some very unique data insights about the current market, about today, that you can use sort of to reframe your thinking about how do you approach crypto assets. Because we only have 10-15 minutes, I have a very short agenda. So I want to outline some key principles that will help you make sense of crypto analytics. And then we're going to analyze today's Bitcoin market, what's happening today, with 8 very simple metrics that anybody, you don't need to be a trader, you don't need to be a quant, you don't need to be a super researcher to understand this. So here's a quick takeaway from this session, something that I want you to think about. So analytics today for crypto assets are very difficult and confusing, and this is something that we struggle with internally. So there are a few reasons for that. So if you think about blockchain analytics, so the metrics that are coming out there from researchers and all that try to analyze blockchains, basically you need to be an expert to make sense of all this stuff, right? Like, what do you do with an address count? Like, what do you do with it? Like, how do you take advantage of it? It's difficult. Then the experts that rely on technical analysis, well, even if you're a fan of technical analysis that only works, a percentage of the time in irrational markets, in very nascent capital markets like crypto, they tend to be very inefficient. Then a lot of the metrics and analysis that is being put out there, honestly, has very minimum back testing that is published, that you can reference. And when you dig into it, there is not a whole lot of statistical rigor, and frankly, we have too many made-up metrics that when you looked at it, the metrics going one way, the price is going another way, and they're good for articles and all that, but there is not a whole lot that you can do with it. So here's 3 pillars, 3 principles that we like when we think about metrics for crypto assets. We try to be to focus on these three key principles. One, any metric should be interpretable. I should be able to explain it to a normal person without having a PhD in statistics, and they should be able to understand. Two, they should be able to be based on statistical rigor. And today we're living in the golden era of machine learning and data science. So why not to take advantage of those techniques? And two, you should be able to do kind of something with it, like if not trading, at least to figure out a thesis about the behavior of a crypto asset. So at least you should try to hit a couple or two out of these three key principles to sort of make sense of some of these metrics. If not, I mean, they're really pretty, useless for the most part. But don't take my word for it. So let's look at it at a very simple scenario. Today, you want to buy Bitcoin. You're a new investor. You want to buy Bitcoin. So why should you consider a couple of contextual things, right? One, you want to understand what's happening today. Like in the last couple of days, what Bitcoin has been having dancing around the 7,000 mark. Why? And two, recently, a month ago, we had one of the worst crashes in history. The recovery has been spotty. So how do you make sense of that, right? Are we still up for another crash? Are we fully recovered from it? It's a major event. So many people call it a black swan event, even though I don't subscribe to that thesis. But how do you make sense of that? So those are the two key parts: major crash, current situation. And we're going to try to show, I'm going to try to show you 8 fascinating metrics that sort of are compliant with the principles that we outlined. So one interesting thing is when you think about blockchain crypto analytics, there is not a single vector, right? Some people like to focus on blockchain, but blockchain in and of itself isn't sufficient because a lot of the trading and activity happen in exchanges and the results are not visible on blockchain, not all of them. Then you have a perspective of the derivative market that is becoming very important. And obviously you have the spot market. Those are the 3 main vectors of analytics today. There are other things like alternative data sets like Twitter and Telegram and all that. But in terms of the actionability, the impact of that is very, very minimum compared to these 3. These are the 3 that you're going to spend a lot of time analyzing. So let's look at the current situation of Bitcoin in 8 fascinating metrics, and then we can go from there. So one simple question: are Bitcoin traders today making money or losing money? When people are making money in an asset, people are enthusiastic. So it's a good club to be part of. So this is a sophisticated analysis that we do in ITV called the in and out of the money around the current price. But without getting into the detail, it's based on a machine learning technique called clustering. You can see that 53% of the active addresses that are close to the current price today are making money. So this is actually good. It's showing you that over 50% of people are realizing profit, and that's something that you want to be part of. Now, if you're going to invest, what's the next price action? What's the next level in which things are going to get interesting? So the fascinating thing about Bitcoin and crypto in general is that when you look at blockchain balances, you can derive actually more objective levels of support and resistance than compared to traditional technical analysis. So the same analysis that I just showed you a few minutes ago shows you that, for instance, there is 750,000 addresses that bought Bitcoin at 7,000, 1 million addresses that bought at 7,200. So if the price goes up, these are levels of resistance. So about 7,300, there is going to be about 1.8 million addresses that might introduce resistance, and there is a strong support at 6,600. So it's unlikely that Bitcoin will dive much more further below 6,700, and to get to 7,300, there is going to have to do some work. I mean, some objective analysis that anybody can understand. Now, are people investing in Bitcoin? Is that for a long time? They're actively trading. Obviously, we know it's both, but can I get some sense? I mean, that's a question that anybody can ask and understand. You don't need to be a scientist for that. So a fascinating metric that we discovered is that even in the middle of the March crash, the long-term holder investors were growing. So people were holding for the long time. This is a metric that calculates addresses that hold for over a year, that have active balances in it. So, I mean, very, very good metric, right? You're seeing that there is confidence in the asset and the number of long-term investors is increasing. How about the people that are active today? The people that are trading. How often does that happen? Are they holding for a day? Are they holding for a week? Are they holding for a month? So in the case of Bitcoin, there is this concept of unspent transactions outputs that give you a very good idea of times. I'm going like 20,000 miles per hour because this is only 15 minutes. So when you look at the UTXO analysis that we do and ITV during the March crash, there is a couple of fascinating trends. So look at this down here. These are Bitcoins that are younger than a day. It increased during the price crash and then immediately decreased. Then addresses that were between Bitcoins that were between 1 week and a month, it also increased and decreased. But the ones that were between 1 month and 3 months increased and remained steady. So that gives you a trend that the people that are invested, that get past that threshold or of a month, they stay for the longer term, and there is a lot of short selling and speculation in the lower tiers. Again, complicated analysis, but the results anybody can understand. So how much, most people trade on exchanges. So when there is one of those things, like price fluctuation, crashes and all that, what happens in an exchange? So one thing that you can do at the blockchain level is monitor, right, the flows in and out of exchanges. And we do that using some machine learning classifiers, algorithms, and we found some fascinating metrics. So during the March crash, when the price was going down, we saw a massive influx of money into exchanges, which told us that traders were pushing money in order to liquidate the positions. And you can see down here that the number of inflows, that is the green line, vastly surpassed the outflow. So money was going into exchanges, but it was mostly to liquidate positions. That's interesting. So I'm trading, I'm buying Bitcoin, I'm looking at my order book and I see spike. I mean, it happens all the time, even in the top exchanges. How do I make sense of that? Are exchanges manipulating price and volume? Is something else going on? So one interesting thing, that one reference, a factor that we found that is conducive to spreads is the injection of large amounts of money into exchanges. So same analysis I showed you before, but below we have the order book spread. Look at this. There is an inflow during the March crash. There was inflows of capital into Kraken. This is exchange that we're analyzing. Also, due to that, the inventory, the number of Bitcoins that Kraken was holding at the time increased, right? And look at the spread. Look at the order book spread at this time. So when more money was coming in, it was precursor to large positions. So but those positions were really not correlated with what the market was saying. So the spread went off the chart. So every time you see a spike, you probably can associate it with, oh, maybe there was large transactions coming into the exchange. How about futures? Derivative is becoming, we hear about this all the time, futures, derivative options, perpetual swaps. They're becoming relevant, but how relevant? And futures and derivative is this thing that most people associate, that is for sophisticated traders. So if I'm the average Joe, can I make sense of this stuff? Can I get something? Can I get an edge? So one metric that we think is, one analysis that we think is super simple to do and super helpful is when you combine this metric called the open interest that shows you the amount of open contracts on a future with the price. There is multiple rules, but typically, let's see what's happened today. So when you look at the number of future contracts, the open interest, the active contracts, that number is going up, it's increasing. But then the price is going down. Not today. I mean, today is a little bit up. That's a bearish sign. So open interest going up, price going down, that's a bearish sign. Another one is when...
interrupt you, my man. Jesus, I'm so sorry to interrupt you. And I know we only had a short time slot, but our time is running out. I'm so sorry. If you can wrap up in the next 30 seconds, if that's possible.
Absolutely.
Awesome. Thank you so much.
Last metric. Are futures used for speculation or for actually trading? So this is a metric that measures volume over open interest. So when there is a lot of volume, contracts are changing hands. The open interest tell you people that are actually buying. Quite recently, there were spikes on this metric called turnover ratio, which means there were huge speculations during the March crash. compared to that. And that's a metric that you can use on futures to get an edge. So there are many metrics, but typically you look for those in data science rigor, you can explain it, and they're actionable. So the quick summary for this, crypto analytics need to get real, enough of made up metrics. So 3 pillars that you can follow to make sense of this thing. Any metric should be interpretable. They should be based on data science and mathematics and statistical rigor, and you should be able to do something with it, because crypto is the richest asset class in history and provides some very fascinating insights. This is my contact info. You can drop me a note at jr.intotheblog.com. I write periodically on Medium, and you can contact me through there, or just contact me through intotheblog.com. And now we can open up for questions.
Hey, Zeus, thank you so very, very much for the presentation. It was absolutely fantastic. Unfortunately, we do not have time for any questions, and I'm sorry, but hopefully you can join us in the virtual world where you can interact with everybody that's come to the virtual conference and get together with that. Thank you so very much for your presentation and your time today.
Thank you very much.